ننتقل الآن للجلسة اللي بعدها ونفتتحها بدراسة قامت فيها عرب نت أنه 5% من الصفقات الاستثمارية لعام 2016 وصلت قيمتها لأكثر من 7 مليون دولار، و9% من المستثمرين في الشرق الأوسط وشمال أفريقيا يوفرون استثمارات مراحل النمو. فللحديث عن الجلسة هذه، جلسة توسع الشركات الناشئة، رأس مال النمو وتطوير فرق العمل وعمليات الدمج والاستحواذ. وللحديث ولإدارة الحوار يتفضل الأستاذ تامر قدومي، يعطيه ألف عافية وشكرا لكم جميعا.
السلام عليكم. We'll do the panel in English. Thanks for coming and thanks for attending the panel. My name is Tammer Qaddumi. I'm a partner at VentureSouq. We're a syndicate for investing in early stage tech deals. So that's what I am, but the focus is on these three guys. These three guys have built companies that have grown to impressive scales already. So by any stretch of the imagination, these guys are already success stories. And what we're going to talk about today are three aspects that companies like them face. And those three aspects that they have to deal with is growth capital. Once you've reached, what I mean by growth capital is once you've reached a stage where you've developed a product and you're selling that product and you're ready to then scale. You've identified unit economics that are profitable and that you can push around the region or around the world. At that stage, you enter into growth and you go and raise a new round of funding. So that's what we mean by growth capital. Following closely from that is scaling your team, and what I mean by that is human resources. So once you've raised a bunch of money, then the first thing that you're going to do, 70% or more of any round of funding that is raised goes directly into hiring people. So what are the challenges that guys like these face after they raise their growth funding in hiring more people and scaling their team? And then number three was on M&A. And what I mean by that is inbound or outbound, either you're looking to acquire a company or a company comes looking to acquire you. So these are three sort of fields that companies, when they reach stages that these guys have reached, start dealing with, and we're going to talk to them about, okay, how do you prioritize, how do you handle these issues as founders or as senior members in companies. Alex is the Director of Strategic Partnerships for What Three Words. It's an investee company for us, VentureSouq. We invested into their Series B round. Ayman is the founder of Altibbi. Geet is the founder of Holiday Me. The first thing that they're going to do is they're going to tell you about their company briefly, very briefly, and then they're going to give you the vitals on those three facets. How much growth funding have you raised? How many employees and how many locations are you in right now? And have you engaged in M&A discussions already? And then you'll know what perspective these guys have on those three subjects. So, Alex.
Cool. Thank you very much. So, yes, I'm Alex from What Three Words. We're a global addressing solution. So what we're trying to do is solve the addressing problem in the region. And we've done that via splitting the whole world up into a grid of 3 meter by 3 meter squares, and then giving an address of 3 words to every single one of those squares. And so it gives consumers a very unique way and a memorable way of referencing a location and an address, enabling e-commerce and travel and mobility, etc. So
the way that works is every 3 meter block will have an identifier, and I could tell you, Talabat, can you please deliver food to Akala Rajulu Tafaha, which is this block right here, and Talabat can come and bring the food directly to my location. It's very interesting technology.
Much better job than me. Thanks for that. Yeah. So in terms of the three things we're looking at in terms of funding, we've raised just under $30 million. Our Series B just closed with led by Aramex and some other key, and also VentureSouq. In terms of team size, we're around about 40 people, but it's changing frequently. Every time I come back to the office, there's more people there. In terms of M&A, we are a very unique product, so acquiring other companies isn't necessarily something we can really, we don't look to do at the moment. But in terms of being acquired, right now we're just absolutely laser focused on executing our strategy, and I think that'll take care of itself. So right now, I think acquisition, we're not looking to be acquired. We're fine for funding, and yeah, so that's where we are.
Ayman.
Thanks. So my name is Ayman. I'm a co-founder at Altibbi. So Altibbi, in a nutshell, is basically the largest Arabic medical content site in the Middle East. And the second vertical that we launched 2 years ago was a telemedicine vertical. So users come in, browse the site, and if they want to talk to a doctor, we connect them to a primary care doctor in less than 1 minute. As far as the three questions, so we raised around $6.5 million 6 months ago, and we're around 30 employees so far, present in Jordan. We have some developers out of Gaza, and we have a physical presence in Dubai and Egypt. As far as M&A, I think it's a bit too soon for that, but we're seeing faint signs of things that we want to, or verticals that we want to get into, and in some good ways, if we find or identify a potential company that is small in size, which we are seeing, they could be actually there could be room for that, but again, you have to manage that with cash flows and be creative in how, I guess, the transaction would happen. Thanks.
Yeah, so I'm Geet. I'm a co-founder at Altibbi and the CEO at Altibbi. We are into the online travel space where we basically sell packages, holiday packages online, and there is a serious advantage in just purchasing a holiday package vis-a-vis buying, let's say, a flight or a hotel separately. And we basically are able to extend the advantage of our procurement to our customer and hence deliver packages. In terms of capital that we've raised, so we've been around for about 3 years. Primarily, we started in UAE. We've just entered Saudi Arabia, and it's a very, very important market for us. We raised about $23 million in capital in all. As an organization, we are a little bigger than the numbers. So we are about 230 people as a company. In terms of M&A, as we grow, and we've been kind of growing and scaling for the last 3 years pretty well, I think for us it becomes really important to look at backward integration, where we are able to maybe look at certain players in certain destinations which help us optimize our cost structures once certain volumes are achieved. And so once we are continuing to increase our volumes in a certain destination where there is high amount of traffic, we can probably acquire a local player just to kind of optimize on costs. On the other side, are people looking at us? These are discussions that keep happening. We're not really not concerned. I mean, at the moment, I think the focus is clearly going to grow the company and bring it to the next level.
Okay, so growth capital. You've reached a stage where you're ready for it, and in round parlance, it usually refers to Series B or Series C, right? Is that fair to say?
Yeah.
So, how do you know that you're ready to go and pursue that type of funding?
Me. So I think clearly there are various models that people kind of look at in various parts of the world, but to me, what really starts working is when you kind of demonstrated at a certain level that your product has a certain demand, there are people who are buying, and that you are showing, or if not already kind of doing it, where you are showing some profitability at the contribution level, which means, in a very basic manner, the money that I'm spending to acquire the customer and the money I'm actually earning out of it, I pocket some of that, right? So, and what that demonstrates is that if I'm actually profitable at a contribution level and I'm able to put in more money, I am just able to multiply more and more customers and hence increase my revenue and profit, right? So I can actually show a path to profitability. That to me is where growth capital really signifies, right? So if you're able to demonstrate at a certain level that you are able to make some amount of money or very close to making some amount of money, and that just infusing more capital is going to help you kind of accumulate bigger profits with just acquiring more customers. To me, I think that's where, the category of growth capital starts coming in.
Okay, and where were you on a, if you want to call it gross margin basis, and how many customers? And keep in mind, yours is a B2C business.
That's right.
So it relies on many customers buying, packages off of your website.
Sure.
How many users did you have, and what was your, gross profitability per transaction when you went after
Yeah, I mean,
growth?
I possibly can't disclose, all the details, but at each customer level, and we've also kind of optimized how we've grown in terms of the contribution that we make. So at each customer level, we were able to make a contribution margin of about 20%. So, that's, and then we are able to grow the contribution margin per se, right? And that's where the whole, story becomes interesting for investors, because, clearly then we know that, for every additional dollar that is invested, there is more that you can leverage out. And then that starts contributing further to your fixed costs and so on. So you have a certain path to profitability if you are able to execute it at a certain level. So, that's what you demonstrate and so on and so forth. I mean, in terms of numbers, we typically receive close to about 800,000 uniques every month, which is, the kind of customers that are coming. Predominantly, like I said, we're getting most of our business from UAE. We've just started, the last 3-4 months actively, doing stuff in Saudi. And that's scaling up really well. So I mean, so I think that probably explains how growth capital needs to get infused in each segment.
So I think that you guys probably have different rules than measuring, gross profitability per unit. So how did you know that you guys are ready to go after this?
So we were founded around 2014, and the nature of What 3 Words, it's a very unique product and it's quite an interesting and very unique product. So getting people to actually go from this is a great idea to this is actually something we want to implement was a challenge. But it was my CEO who was speaking at the World Economic Forum, and it was then where we had the Prime Minister of Mongolia come up to him and say, I need this addressing system in our country because we don't have any addressing system, and therefore my country can't really benefit from e-commerce and the benefits that has for GDP and development, etc. So it's from that point where we saw interest from a country, from a government, and also seeing the implementation of that with the adoption, and that's the key point, and that's the key differential between us and I guess other addressing systems that are out there. Adoption is the key challenge, and we're seeing that. We saw that in Mongolia, and obviously when you start to see that, investors start to see that, and that's when we realize, okay, this is something we can start to implement, and then that's what we've started looking at. Obviously, our other key markets we're focusing on right now are South Africa, Saudi Arabia, and Mongolia, where we have offices. So I think it was really seeing the adoption factor rather than the margin, because I guess the margin will come. We're a mass consumer use product. Essentially, like every time you use Google, we're the equivalent of that. So that was what we saw.
So once you saw that adoption was picking up, that told you we need to go and raise more money now to take advantage of this, keep the momentum going.
Yeah. So it's a case of when you see the adoption, it's just a factor of marketing. So how are you reaching those customers? And I think you just need to show investors that if you just turn on the tap, those numbers are going to increase, reuse will increase, and the business will obviously start to grow. So it's just showing there's, you have very ambitious or very sort of risk tolerant investors, and then you have the more sort of growth capital guys who just want to see the numbers at the end of the day, and want to see, okay, if I invest this amount of money, what is my return going to be? So putting the business into that position is key, and that's when you approach the sort of those slightly larger investors.
Okay, Ayman, same question, and then I want you to go immediately into what promises do you make to the growth investors when you hit the path? What are you telling them that to make it enticing for them to come in and invest in your company?
So in our case, I would echo what my colleague said. But in our case, it was a subscription-based business. So investors looked at stickiness or basically churn. And in the GCC, our users actually had a good lifetime value. So in subscription, the subscription economics are basically lifetime value versus cost of acquisition. You know, how much are you paying to get the client and how long is he lasting on your website? So in Saudi and the UAE, we had actually good numbers of retention, which was very attractive to the investors. So we got to a stage where we're getting a lot of organic users, and basically, again, echoing them, the percentage of allocation of money that goes into marketing becomes a lot higher once you raise the money. So basically, you're raising the money to basically scale. You nail it in a very shaky way at the beginning, but there still needs to be a lot of product fixes. You need a lot of feedback, but then more money starts being spent on marketing because you're getting positive returns. And that's, you know, the true testament of the product, the operations, and the logistics, basically. We basically got to a point where we were getting thousands of users, active users per month. And based on that, you know, which led to the promise, I guess, which, you know, we sold our business to the investors through our business plan and projections, saying that, you know, we're at X today, and by the end of the next year, we're going to be at 10X or 15X. So that's what the investors are looking at, basically. You know, they're looking at, you're using the money to scale it, how far can you scale it? But it's a bit dangerous because investors always want growth. And sometimes you really need to push back, because if you're growing at the expense, for example, if you're growing at negative margins, that's not a healthy, those are not healthy economics. So in certain places like Egypt, for example, for us, the lifetime value is a lot shorter than a typical customer coming from Saudi. So basically, you know, you have to grow, but you have to grow in the right areas and then use product fixes to increase lifetime value in other areas. And sometimes things, you know, happen that actually become binding constraints when you're reliant on third parties for example, a long sales cycle or payment gateways integration, adoption in general, and awareness, because we're basically a new business and we're creating demand out of nothing. That takes time.
Okay, good. So now you've raised, you've known when to raise the money, and you went and raised the money, and all of a sudden, one day, millions of dollars just shows up into somebody's bank account. What do you do then? I mean, when you're raising money, this is something Ayman said, all you think about is the challenges of raising money. After you get the money, you get a whole nother set of challenges that nobody really talks about. So what are the big issues? And actually, I'll start with Ayman with people's permission. You tell us kind of once you raise the money, then, okay, what are all these other problems that I got to deal with now?
Yeah, so the biggest enemy when raising money is actually raising money. You need to conquer that. But then after you raise the money, the enemy becomes time. So you have a limited runway, and you've sold the promise to the investors, and you got to live up to that promise. You have to actually become a lot more aggressive in actually pushing your employees to the limit, while the challenge is maintaining the culture that you started off with. So for example, when scaling employees, one employee was basically a de facto analyst and manager. But then when you scale, you're getting more senior people, so you get a manager on top of her. And how do you manage that?
So she's annoyed that now all of a
Basically, yeah. So you're getting another layer of employees into the organization, and you have to be able to keep the culture that you started off with, at that same level. Otherwise, a shift in culture can actually be very toxic to the environment, and it doesn't create very sustainable companies. In terms of challenges, the biggest challenge we had is getting talent, because we don't want to compromise on talent, and so we've churned through a lot of candidates that basically weren't filling the criteria that we wanted. Other challenges were basically infrastructure challenges. You have the money to scale, but in terms of, for example, payment gateways or online payment adoption, it's low in certain areas of the world. And then so sometimes you become hostage to certain players like the telcos, where they capture 50% of your top line, which is, can be very harmful to your unit economics. Scaling countries, I mean, one of the beauties of being in places like the US, it's one country, one regulation, one rule of law, you just scale. Here, you have to consider every regulatory environment in every country, and every single one of them is different and more unpredictable than the other. So that's, for us, scaling in different countries, looking for country managers, and then managing those country managers from afar is another key challenge that we're facing.
Yeah, I think all three of you have had that issue, moving into different countries within a region, moving into different regions. So, Guy, do you want to give us your perspective on that same?
Yeah, so I think, investors want you to look at growth, and not only investors, as entrepreneurs, you're continuously looking at growth, right? And so, in our case, we specifically started from UAE. Now, UAE is going to give you certain growth till a certain level, but then beyond that, the growth percentage slows down. So you then need to obviously start looking at newer countries and newer regions. And for us, we obviously started looking at Saudi. But what happens in this case is, as you kind of grow in one country, what you learn out of those countries cannot directly be applied to another country, right? So there's just the nuances are different. So you start learning again some of the stuff, and some of that stuff you need to unlearn, right? So, and it's also, there's an element of trial and error that starts coming in. So what typically happens is your dollar does not actually give you the same return in a new country just because you learned something in the previous country. Because, so you got to start all over it again. And this is the typical challenge that you kind of face, which obviously the investors will typically come about and say, hey, but you did that there, and why are you not able to make it work here? And so those kind of discussions happen in a logical manner. I mean, not argumentative, but just logically. And that is what you need to get over, right? So any new market you address, there is always going to be trial and error. There is always going to be process of optimization that you need to go through. And some of those dollars are just not going to give you the kind of result that they would otherwise in the country where you've already established yourself. So that's the challenge that you come about. In our case, like, I'll give you a simple example. We allocated a certain budget for, let's say, UAE for marketing, and that's clearly working really well. And a similar dollar budget, let's say, allocated to a newer market would not give us the same return, right? But do you then not go after the newer market? I mean, that's clearly not the way forward, right? Because the growth is only going to come from a new market. So you have these learning curves that you go through, and then there are these elements of overlap, and it's a constant juggle, but once you are at it, you kind of get there.
Okay, Alex, you guys are a global business. You have to map out. You've already mapped out the entire world, and you have to go and sell that. So how do you deal with culturally? So how do you deal with mechanically when you go and enter a new country? How do you do it? What's step one when you come to Saudi Arabia?
Well, Saudi, we're still looking for the country manager. So we're still trying to hire on the ground. And
so that's step one. Identify a country manager.
I think it's mirroring some of what the guys have said. It's people and process. So the amount comes into the account, but you can never, and essentially it's all hands to the pump, and you're trying to get the growth in for the investors as soon as possible. And you have to be disciplined with people. You have to hire the right people. It all comes down to the people. Yeah. Without the right people on the ground, they won't be adaptive to the marketing changes that are required. They won't put in place or adopt the right processes. They won't be able to think outside the box to implement the product in that specific region. So it all comes down to people. I know people are saying it, but it just comes down to being disciplined with the hires. And everyone's fighting fires. As soon as the money comes in, you're running at 100 miles an hour, and it's very easy to say, you know what, I think they're good enough. I think they'll be okay. But I've seen it, and not in the company I'm in right now, but in previous roles and other experiences with startups. You can get a CTO in who doesn't know what they're doing, and next thing you know, you're 9 months back, and then you've got to find a new guy, and then it's a real problem. So people, and also the passion they have for the product. So again, that's the person, but yeah, the people.
Yeah, I guess after you've raised a bunch of money, then you bring on new people, and they're kind of hired guns. They're not the original team that through blood, sweat, and tears built the thing.
Yeah, and it's and obviously the original team, they know how it sort of that you grow together, so you understand how each other operates. As soon as new people come in, getting that right cultural fit, getting on that wavelength, especially when you're separated by continents, can be really hard. And these were things like Slack. Obviously, it's probably my best friend, but also my worst enemy. Being able to communicate at scale across a business is challenging, but it is essential. Things like Slack can help, but at the same time, you're obviously inundated. So getting that visibility of information is key. But that takes time. It's evolution of the business, and you work to adapt it.
Okay, we're going to get into the third subject, which is M&A. But I also want to invite people. If you have questions, just put your hand up. If you have something burning that you want to ask, okay, let's do it. Yeah, just shout. No mic, just shout. Yeah, tell us. Tell us before you got to growth, what did you raise, and at what roughly? Give us the rough terms of the fundraising trajectory before you landed on that growth stage of funding. Are you comfortable doing that?
Yeah. So we raised our first round, which was 4 million. Then we raised another round, which was 7, and we now recently raised a round of 12. There's no hard and fast rule here, right? I mean, what do you offer in terms of equity? It all typically boils down to, beauty in the eye of the beholder, right? I mean, so if the investor thinks you're worth so much, and you think you're worth so much, and you got to basically find a line. This is just me personally. My view is that on an average, a round can be anywhere between 15 to maximum 30%, right? I mean, that's the kind of equity that you dilute. Again, it's a very, very subjective answer. Like I said, it depends on each and every situation. But it's that kind of range that typically, at every round, you would want to dilute. But you don't want to dilute more than that. Anything less than that would not be very interesting to the investor, and so on and so forth. So, you got to basically find, the right space where it kind of works for you. But that's the range that, at every round you typically basically discuss.
There's another question.
Well, you don't want to.
No, yeah, I'm not going to go into numbers, but I'm just going to say it's basically an art. It's not a science. And if you're going through it right now, I would really pick other entrepreneurs' brain, because it's not just the equity that could be the issue. It's all the other terms in the shareholders' agreement. It's the voting rights. It's whether they can interfere in certain areas. How do you deploy that capital? So you really need to watch out for all the other elements, as well as the equity, obviously. But there is no benchmark, and depends on the country and the potential size of the market and where you are in the, hopefully, hockey stick. So.
Can I say one more?
Yep.
So I think one more dynamic to that would definitely be where do you position that investor from a strategic standpoint? So we obviously look towards strategic investors with a lot more sort of potential. So if you're looking to launch into a specific market or in a specific industry, having that know-how or that go-to-market sort of network is critical for us. So those sorts of guys, obviously, you're going to start to think about a higher percentage for those sorts of investors. So yeah, I think that's just another dynamic to put in there.
Question.
Hello. You mentioned that when you get the capital and you hire a level of, let's say, executives or top management, that could hurt the culture of the people who grew with the company or started. What are the challenges that you saw, and how did you manage that? Because I assume there could be maybe some morale issues or people who expected to be in those levels, but now you've hired a top level executive team. Can you talk more about that?
And also, does it create politics?
So I'm not a fan of politics. So if I see politics, I immediately kill it. I hate that sort of stuff. I've seen companies from my own background that do that, and it creates a very toxic environment. So we really don't try as hard as we can to refrain from that, politics stuff. As far as how did I manage it, well, I don't know yet if I've managed it well or not. Time will tell. But as long as you're being fair to the employee, as long as you're being honest and transparent, I don't think that should create issues. What I told that specific person is that I still don't think you have the intuition or the judgment that gets racked up with experience. You're still 26. You haven't been through much to basically look at the number and say, okay, this is wrong because it just doesn't make sense out of your own gut feel or experience. She's not there yet, and that's why I needed someone with more experience to actually manage her and actually basically be the layer that would just be comfortable for me to trust and say, if she's going to hand me something, hand me a set of numbers, I'm going to trust that they've been sanity checked and I have to go through it less. But yeah, as long as you're honest and transparent, I think they should be able to understand. If they don't, then that's their issue, not yours.
Okay. I want to get into the subject of M&A. And I guess it's three questions, three sub-questions. I'm going to say them all now, and then you guys address whichever ones you think are the most relevant. Do you build your business for M&A? Did you build, when you set up the company, were you thinking, okay, this is the person who's going to be acquiring me, okay? At what stage do acquirers come and start sniffing around? So have you reached now a stage where companies come and they're, exploring interest? Hey guys, here's what we could do for you if you came and embedded yourself into our bigger group. And then number three is, if you get some of this inbound interest, how do you deal with it? Do you set up a task force and say, explore this? Or do you, as the CEO or a senior member, do you just deal with it yourself and not discuss it with the team? Do you get the whole team together and say, hey, we got this opportunity? How do you deal with these types of discussions when they come up? Geet, if you want to go.
So, yeah, so do you build for an M&A? No. The answer is, you build to build a business. M&As happen if they happen, right? So it's part and parcel of, again, meeting of two minds, and whether that happens at a certain level, that's a different story. But you build a business because you want to kind of build something unique. You want to scale. You want to become profitable. So that's definitely an objective, and you want to build a business. In terms of have we been, what is the right time that you kind of get approached for an M&A? I think there are various stages at which people get approached. I think, but in my view, an M&A is where the other entity has to see value in you. Whether the value is in terms of a product or your customer base, or just making, or it could be even to potentially kill competition altogether before it arises, right? So if you are in any of those boxes, and if someone's kind of looking at you in that context, it may or may not happen, right? So it's a very case by chance kind of a thing in my view, right? And not at this stage, But
you must, you correct me if I'm wrong, every investor who's looked at you has asked the question, who's going to acquire you?
Yeah.
So you must think about it. You can't
Without
just be like, oh, it just happens.
Without
you must
a doubt.
be thinking about
it. So I think at a certain level, but this is what I'm trying to say, right? So you don't think about it too early in the game, because I think it's just going to spoil the way you think about building a business, right? And building scale. So, without a doubt, investors, when they come in, they typically are looking at an exit period of whatever, 7 years, 8 years, sometimes 10 years. And you want to build the business till then. By that time, you obviously start looking, scouting, but that's, pretty much later in the game. Investors help you. And it may not be that investors want you to exit. Investors want an exit for themselves. It could be a secondary sale, or it could be anything else. So there are various, permutations and combinations that can be worked out that happen. But again, like I said, right, to me, you build a business, once you create value, you're pretty much sure that people are going to see that there is value created and this value can be embedded into the bigger entity. And that's, what's going to be exciting on its own anyway. But the idea is for you to create value in a business, and that's pretty much the process of building a business.
Okay, Ayman.
I don't believe in building to flip. So, building a business just to sell it. It doesn't create something sustainable. You're building it on shaky grounds, and it just says something about you, and what's your actual connection to the business, right? So generally that sort of culture doesn't pan out, at least from what I think.
It doesn't even, sorry to break, but it doesn't even help employees, right? Employers will start thinking, is this what the final objective is? Will I have a job even? So you just build a business.
And so one of the exits or one of the exit routes is actually, as ambitious as it is, but it's an IPO, so you don't really need to, build it for that certain benchmark in the US where you're thinking, okay, we want to get acquired by these guys. The beauty of what we're doing is it's a bit more organic. The way it grew, the way it actually became. It's not a copy-paste business. So and that's something we're actually proud of. So we're actually looking for routes, or when we think about it in the long term, something like an IPO is actually better than an acquisition. We're still small, right? So 6.5 million in the grand scheme of things is not that big. We got a call from a benchmarking company in the US that was asking about us because we became on their radar, but it was something that we dismissed. We didn't want to engage in that discussion today. We still think we're scratching the surface. As far as us acquiring other entities, I think we probably don't have enough cash to do that. But if we find a small business, we'll probably be acquiring the software itself, and it would probably, if I had to guess, would happen through a share swap instead of actually, you paying cash to actually get the business. Mm-hmm. But it's still like those are faint signs. We're a bit small in that regard, at least.
Mm-hmm.
And I think it's obviously quite clear, and obviously from the investment side, it's all about M&A. I think from within the business, I think you can see from the guys sitting next to me, and I mirror their comments, and that if you look at M&A and if you think about M&A in terms of being acquired, you're taking your eye off the customer. And everything should be about solving that. And that is about why the reason the company got founded in the first place, and the mission of the company and what everyone ladders up to is solving that problem for the customer. So if you as a leader in the company have your eye on, hang on, if I change this, so that person might like me more if I change my product that way, you're not solving for the customer, you're solving for somebody else, and then the customer is going to stop using you. So then you're just going to, you'll drop off. So M&A and being acquired is obviously a great thing. I think IPO, obviously everyone aims for that. But it's obviously from the investment side, M&A is the focus.
Okay, what 3 words, if you're going from point A to point B, or if you're ordering something, use it. Altibbi, if you need to source information about health or issues that you're having, use it. Download the app, use it. Holiday ME, if you want to book a holiday anywhere in the world, go to their apps. Do you have an app? Download the app, use it. Thank you guys very much.
Thank you.